Now, talking about the election, of course, some research houses have advocated active trading strategy for 2018. That's in light of the elections fast approaching, just as you mentioned. Now, is that what we should be looking at, or what, in your opinion, is the best course of action for investors?
I think, to be honest, this would be a year of two halves. It will be a particularly strong first half, and then perhaps a particularly weak second half, because our position, as I pointed out, is in a market where you have quite substantial international investor drivers, chances are that they would likely take a pessimistic view on the outcome of the elections or the developments leading up into the elections. And so we expect some profit taking, or significant profit taking, in the second half of the year. This is having had a relatively strong first half, driven by the fact that a lot of them are underweight, still underweight Nigerian equities, on top of all the relatively positive narratives I pointed out. So I think that the way to play it is that you obviously want to be positioned in the market at this time, but obviously, careful to take profits well ahead of perhaps the second half of the year, when international investors start to take account of the upcoming elections.
Now, a considerable percentage of investors in the Nigerian equities market are foreign portfolio investors who are concerned with the global economy. As such, actions are directly reflected in activities in our market. Now, what steps, in your opinion, are necessary to hedge against impromptu shocks as experienced last week?
Well, the reality is that the global economy is actually fine. In fact, you could argue that that itself was a bit of a problem. Because if you look at what actually triggered the weakness in markets, it was really because non-farm payroll data was particularly strong, and that signaled that perhaps the Fed could look to raise rates quicker than was early anticipated. So I guess to add some context to your question, I think that the global economy, or context of global economy, is strongly supportive of a strong equities market in Nigeria. So as long as that remains the case, we think that Nigeria can obviously ride this first half relatively strongly. It's more internal factors like elections, I pointed out, that for me represent the bulk of the risk. The global economy is relatively strong. It's what is driving commodity prices, particularly oil, but also metals, sub-commodities as well. That is very positive for Nigeria.
And, of course, following the decline in the market over the last 2 weeks, what key indicators do you think would drive market performance in the coming weeks as companies are expected to start releasing their full-year earnings?
That's a good point. So, we expect earnings to start trickling this week. Nigerian breweries should be the first to start. We're expecting numbers tomorrow. Sadly, our expectations are that volumes were relatively weak for the financial year 17. However, they should more than compensate with significant recovery in earnings, which I think the market should respond to, perhaps mildly. And that's because investors are more concerned or looking at the volume as opposed to the actual earnings trend. There is obviously concern that the competitive landscape in the beer sector has increased substantially, making Nigerian breweries more vulnerable, hence the lack of support we've seen for the stock. But just moving away from Nigerian breweries, we do expect that the banks, once the numbers start to trickle in, particularly in early March, late February, early March, we think that should seem to reaffirm the market's position and some of the names that have done quite strongly over the last year.
Okay, so what upsides, if any, do emerging markets have following the decline in the global equities market, and what opportunities do you think local investors can key into to achieve more profitability?
Well, I think that the weakness over the last week, the week before that, obviously presented some opportunities for investors to go back in. Markets had taken off pretty rapidly early this year. So I think that there's obviously opportunity in names that did sell off quite significantly. Again, the reaction to the developments last week were, in my view, not necessarily warranted, but again, just forced by the fact that markets had rallied very hard and, you could argue somewhat toppy. So, it consequently, translated into some profit taking. So, given how sharply the market fell, I think that it's presented opportunities for investors to come back in. Same as Nigeria. The weakness we saw last week over the last couple of days, again, has presented opportunities to go back in names that did quite badly over the last week.
Well, Asili, just before I let you go, what advice do you have based on investor type, short and long term, on how to reduce downside risks?
Well, I think to help, you obviously want to have exposure to companies that have relatively strong strong businesses, strong share, very key players in their sectors, very strong management team, corporate governance practices. I think that would obviously help in an environment where there's perhaps uncertainty in the global economy, i.e. oil price shocks, and ultimately the currency, and perhaps companies that try to window dress their numbers, in environments like this where challenges obviously result in relatively weak numbers. So those factors I pointed out, relatively strong companies, strong management team, corporate governance, strong share in the markets, I think are very important in selecting winners over the next year or even 5 years. That's how we see it here.
All right. Thank you very much for your time, Asili. Thank you for your time. Asili Ewe is the head of Africa Equity at Exotics Capital. And in the meantime, the Nigerian equities market closed negative for the 6th consecutive session on Monday, with the all-share index declining by 0.90% to 42,737.89 points, following profit-taking across most sectors. The banking index led the losers, followed by the insurance, consumer goods, industrial goods, and oil and gas indices. In that order, as investors took profit in the shares of FBNH, ICO, Dangote Sugar, WAPCO, and Eternal Oil. And the market breadth was negative, with 36 losers and 13 gainers, led by Eternal Oil and PZ. Total volume traded decreased by 6.33% to 517.4 million units, valued at 5.19 billion naira, and exchanged in 5,852 deals. We'll take a quick break now. When we come back, we'll look at the commodities world with a focus on peanuts. Do stay with us.